I would like to welcome everybody to Jargon Breaker Finance. Technically, we have started the Jargon Breaker series, but this is the first part of Jargon Breaker Finance. So, what's up with Jargon Breaker series? What is different with this series and everything else that I have been uploading on my channel? The main thing is, in this series, I am just going to explain complicated business terms in one or two simple sentences so that you can understand. There will not be any elaborated explanations and examples. But if you want to know more about these terms, you can definitely comment below, and I am going to make a different video explaining the term that you want to know in details. Now let's move on with the terms. Let's start with cash method and accrual method. Both of them are ways of keeping records in your company. In cash method, you are going to keep the record when the cash is received by the company or you are paying cash to someone else. And on the other hand, for accrual method, it is all about keeping records when the work is done, regardless of when the money is paid. Someone might be paying you money 6 months down the road, but your work is done right now. For cash method, you are going to keep the record when the money is paid, that is, after 6 months or whenever the actual cash is paid. And for accrual method, if your work is done right now, you are going to keep the record of the expense or revenue right at the moment when the work is done. Now let's talk about maturity. Maturity in finance is also referred to as maturity date. And the maturity means the date when a loan, any forms of loan, becomes due. So, if I take a loan today and the maturity is in 5 years, it would mean that I would have to pay the loan after 5 years. That is what maturity or maturity date means. Tangible and intangible assets. Tangible assets are the assets you can actually physically touch with your hands, and intangible assets are the assets that are intangible, meaning the assets that you cannot physically touch by hand. So an example for tangible asset would be gold. And an example for intangible assets can be the stocks or the bonds of a company. Now let's talk about collateral. Collateral is something you need to give up if you cannot pay up a loan in time. Collaterals are usually decided before the loan is given as a security. Collaterals can be a car, a house, or a piece of land, or almost anything. So, if I cannot pay back the loan in the specific amount of time, the lender will become the owner of the collateral and they can do anything they want with the collateral. Liquidity. Liquidity is a very interesting term. Liquidity simply means how fast an asset can be exchanged with something else. Or you can also say that how fast the ownership of the asset can be switched. The most liquid entity in economic terms is cold hard cash. So, liquidity is how fast you can have access to money. I am really tempted to elaborate on this term, but I will not do it right now. Liquidation is another term that you might think that is similar to liquidity, but it is not. Liquidation is completely different to liquidity. If you want to know more about liquidity or the difference between liquidity and liquidation, you can comment below and I'll get to work. Bull market versus bear market. A bull market is a share market that is currently on the rise, meaning the prices of shares are increasing. A bull market can also indicate that the economy is currently in a good state and unemployment rate is really low. And the absolute opposite of a bull market is a bear market, meaning the share prices are currently going down. This can also indicate that the economy is not in a good shape right now. But that is not always the case. The prices of shares always goes up and down. And when the prices are going down, the share market would be known as a bear market. Inflation. The general concept of inflation is that the prices of everyday goods are rising at a steady rate. So whatever you are buying today, the next year the price of that same exact thing is going to increase. What you have to make sure is your income also increases at the same rate. If your income does not increase at the same rate as the inflation, you are not going to be able to buy the same things you were able to buy 1 or 2 years prior to that. Lease. Lease just means renting or hiring. Renting or hiring something like a land, a piece of machinery, a building, or even a car for a specific period of time. The key word here is specific period of time. When you're starting the lease, the period of time is going to be fixed. That is the difference between renting a place and leasing a place. If you're renting somewhere, the specific period of time is not stated. But if you're leasing a property, you have to state beforehand that you are going to be leasing it for 1 year or 5 years. The things that are generally leased out are mostly a little too expensive to buy. So leasing is there to avoid the cost of actually owning it. Primary market and secondary market. Primary market is the market where stocks and bonds are created and sold for the first time. So when a company goes through the process of initial public offering, they are actually selling the securities in the primary market. And when those stocks are sold after that time, they are sold in the secondary market. Every single stock, every single bond, whenever they are sold for the first time, they are sold in the primary market, and after that, that stock is going to be sold in secondary markets. Tariff, a very interesting term. You might have heard this term before. So if you're confused about what a tariff is, you are not going to be after a couple of minutes. Tariff is actually a type of tax that is imposed on imports or exports. Usually, governments impose tariffs on certain products of different countries. It is usually done so that the domestic products of that country that is imposing the tariff has a better chance in the market compared to foreign products. So when the tariff is imposed, the prices of the foreign products are going to be really high. That is why governments do that, so that the people buy domestic products that are cheaper than foreign products. Imposing tariffs can come with unforeseen side effects, and if you want to know more about that, you can comment below and let me know. Now I just realized I have talked about tangible and intangible assets, but I have not talked about what assets are. Assets are actually the things that your company has going for you, meaning the things that you have. It is not only money, it can be anything that has economic value. Whatever you have or own can be considered your assets. So the machineries you are using to produce products in your company can be assets. That is because you can sell those machineries for money. And yes, you can touch those machineries with your hands, so the machineries would be your tangible assets. And I have already said that stocks and bonds can be intangible assets. So if you are selling your stocks in the share market, those will be your intangible assets, but asset nonetheless. And if assets are the things that are going for you, liabilities are going to be the things that will be going away from your company. It means every single thing you owe to anyone. That is going to be your liability. There are different categories of assets and liabilities. Yes, I've only talked about tangible and intangible assets. There are more categories of assets and also more categories of liabilities, which I'm not going to elaborate today, maybe on a future video. And now I would be finishing this video. No bonus content today. And once again, you can comment below if you want me to elaborate on any of these topics, or you can also comment below if you want me to elaborate on anything at all. Anything that you might want me to know and explain to you. I will be happy to do that. And for now, I would like to thank you guys for watching this video. And since this is YouTube, I have to ask you to subscribe to this channel. Every single subscribers count. And if you are already subscribed to this channel, I would like to thank you from the bottom of my heart. It means a lot to me that you have subscribed to this channel and you are still listening to me talking at this point of the video. And lastly, as always, I hope you learned something new today.